Hello, everybody. Good morning and good evening and good afternoon, wherever you are. I'm Jenny Chan. I'm the founder for 3D Heals. I've been making this speech many times before, but I just want to make a little bit introduction to 3D Heals before we get started. I've started this company about 6 years ago, really just initially for my main interest of wanting to use 3D printing to help my patients to make some anatomical models. But then over time, it gets really, really interesting in that the world is getting larger and larger. And we now have three major missions as a company. Number one is to continue to educate people. So this is actually one of the educational series that we provide throughout the years, focusing on various topics. And number two is to provide opportunities for people to network. I think the pandemic is almost over. I'm really hoping that. And eventually we can get together in person soon, because it certainly is different from just virtual events. And number three is what we're focusing on today, which is fundraising for startups. We're helping startups through this program called Pitch 3D. You guys can click on the link that I'm going to share later. It's free. It's free for the investors. It's free for the startups. It's a very fun process for me personally. However, throughout the years, I realized that we do need to facilitate more direct conversations between the investors and the startups and entrepreneurs, or people who want to get into entrepreneurship. So I decided that we're going to host this very unique event today, because usually we do PowerPoint presentations with very technical focus, but today is more conversational. But everybody who are presenting today are extremely experienced. And I just reread their bio this morning, and everybody has engineering degree. Some actually have MBA and engineering degree. Everybody has more degrees than me, basically, and more smarter and more than me. So I'm really honored to be among all these very smart individuals, because that's what you're supposed to do in life. And so without further ado, I will let people take over. I will let the investors to start, just a couple of minutes of introduction about who they are, what they're focusing on, and what their methodology is, if they have willing to share. So I'll start with tech. You're actually the first on so we're gonna start with the order on the website. So you're gonna be the first, even though you're a little bit late. That's okay. Oh, you're muted as well.
Sorry, yeah, it's a disaster today, guys. Sorry, just board meeting finishing up. Thanks. Yeah, so nice to meet everyone. Thanks so much for inviting me, Jenny. I'm a partner here at NEA. I've been here for 5 years. I was previously at another firm called Miriu, where I was a venture partner. Before that, I co-founded a now commercial laparoscopic instrument company called Lexington Medical. Before that, I spent about a decade in BD and M&A in ophthalmology and cardiovascular firms, Bausch & Lomb, Edwards, and AMO, and then engineering MD and MBA degrees before that. NEA has been around for 45 years now. We've had 24 billion under management over that period of time. NEA 17 is a $3.6 billion fund, and we're fairly diversified. We invest in technology, consumer enterprise on one branch of the firm, and then on the healthcare side, we invest in biopharma services and med tech, and I'm responsible for our med tech investments. We typically invest on the order of $50 to $75 million over the life of the investment. The first check can be anywhere from $5 to call it $25 million, depending on the stage of the investment. We typically look for opportunities that are, $1 billion plus in US TAM. Then just looking for really cool, innovative technologies. Thanks so much for having me.
Thank you. I think the next is supposed to be Tom, but he's not here yet. Let's see. Okay, Thomas. Another Tom. We have another Tom here.
All right. Very good. No, this is exciting for me. Usually I'm on the other side of the screen where you have your Pitch 3D companies, and I'm out in the audience listening and trying to pick out some that might fit with our profile. Again, I'm the Director of Deal Flow for an organization called Keto Technology and Life Science. Keto is an angel investor group. We have about 200 members and very active in seed stage investing, about a third in med tech, about a third in biotech, and a third in hard tech outside of medical. We have a lot of expertise around the table, a number of clinicians, retired professionals, active professionals. Jenny and Natalie are actually Keto members as well here on this screen. And actually more than half of our members are members of other angel investor groups. But unlike some of the other angel investor groups, we are actually a company. So instead of being individual investors, we're actually shareholders of Keto. We hold Keto stock and our money goes into a central pool. And then we as members get to decide what the group invests in. So we are one entity on the cap table. I am the screener out in the front. I go to these events and look at opportunities, go to incubator events, get referrals, and then see if it might be a fit with Keto's strategy. A couple of unique things is we do not lead investment rounds. We always wait for someone else who we know and respect, who have done due diligence and done the screening, done the analysis, believes it's a good opportunity, and then also does the hard work of setting the valuation. I'm sure we'll get into that topic a little bit more. My personal background, like everyone else here, I started out in engineering, electrical engineering. I got my PhD in semiconductor physics. Spent most of my career in image sensors and imaging systems. That includes the sensors themselves when CCDs were first invented, all the way to the present day where they're pretty much ubiquitous. You have 20 in your car, cameras everywhere. So it's been an exciting time for me. I tell people my career has been basically putting Kodak out of business. And that's when that was achieved, I could retire and get into the fun part, which is helping out startups. And one way we help out is by investing. Our check size is small. It's probably just the opposite of NEA, where we're in the maybe $100,000 investment level for a seed round, and then we will participate in later rounds as well. Of the 3 years we've been in existence, we have made over 150 investments, and I think we're up to 85 portfolio companies now. So a lot of small bets. And if Keto does invest, we open it up to all our 200 shareholders if they want to co-invest along the side. That's an option. That's it for me.
Awesome. I think Natalie, you're up.
Great. Thanks for having me. I'm Natalie Levy, the founder and managing partner at She's Independent Investments, also a Keto member, as Tom V mentioned. And I have a background that is also engineering, industrial engineering. And I'd say my advanced degrees, since Jenny, I'm with you. It sounds like we have a lot more MDs on this call than I have education, but I'd say Wall Street was another degree, working at various tech operational roles, another degree. I'd say the investor group that I currently run is very much women first. And what I mean by that is we love investing in women owned. We love, basically disrupting or changing power dynamics and saying, how do we get more women into investing in the boardrooms? We even place women and candidates into these executive roles or in these board positions when we know that, teams are lacking diversity and gender equity. It's something that we're very excited about. Similar to Tom V and Keto, we are seed plus, maybe small A rounds, but also investing much smaller checks than NEA. 50,000, 100,000. I think we'll probably get upwards of 150 or 200,000, for these rounds. We formally launched only in January of this year. We now are upwards of 10 investments, which is really exciting. And a lot of these predominantly women who are investors with us are first-time check writers. We're probably doing about a quarter in med tech and life sciences right now, but pretty industry agnostic. And I'd say we really care about, founding team. When you're investing early, I'd say, we're looking to de-risk, but we don't really have a tight, we need to do just one or two verticals. So that's a little bit of background. I'm here in Boulder, Colorado, and happy to connect out of today. Thanks for having me.
Thank you, Natalie. Yeah, a reminder that actually, you guys can also tell people where you are located physically, if in case people want to meet up. So me, Tom, we're both in the Bay Area. Tech, you're all over the place. In the
I'm
air.
on a plane. If you're just offer me a drink and I'll show up. No worries.
Always offer you a drink anytime. And okay, so we have two Toms today. We have Tom V, who just introduced himself, and now we have the other Tom from Ebonic Venture. So I'll call you Tom G. That's okay.
Is it introduction time? Since as you saw, I was just able to get my Zoom to work properly.
Typical for investors.
Especially corporate investors that can't install Zoom on their computer. So it's kind of typical of the process, but I'm Tom Gwynn. I represent Ebonic, which is a large German specialty chemicals company. And I sit in Silicon Valley. So my focus is kind of all across our 25 plus different business lines. And that's everything from polymers to fermentation to foams, additives, etc. Yeah, and really excited to be here. My background's in electrical engineering, but now work for a chemical company.
Awesome. I think it's Jimmy next.
Okay, thanks. Jimmy Liu, I'm a co-founder of EOS Bioinnovation. It's a new venture that incubates projects and invests in early stage startups in the regenerative medicine space. We like to ideally start companies with scientific founders. We have a very broad definition of regenerative medicine and are modality agnostic. Our focus areas are in gene and cell therapy, tissue engineering and biomaterials, small and large molecules that enhance the endogenous repair mechanisms of the body or help to slow or stop the degeneration processes. We also look at enabling technologies that accelerate the adoption of regenerative medicine therapies and applications. And that would include manufacturing technologies, delivery technologies, and certainly innovative opportunities in the 3D printing healthcare field. I've been in venture capital for the last 25 years, having started in the technology space when I co-founded the venture arm of Acer Computers, and then subsequently helped establish a large US Greater China fund. Prior to EOS Bioinnovation, I helped lead the practice at W.I. Harper, a global VC firm that has over 1 billion assets under management. And W.I. Harper's healthcare portfolio focused on healthcare service, medical device, biotech, life science startups in China and the US. In the later years at W.I. Harper, I directed my investments primarily on AI-based drug discovery companies. I started EOS Bioinnovation with my partner, Brock Reeve, who had served as executive director of the Harvard Stem Cell Institute for the last 16 years. Our third partner is James Wong of Panacea Venture, who was a general partner at Vivo Ventures and KPCB China. We closed our initial capital raise of more than 40 million in financing and actually completed 2 investments already out of the Harvard ecosystem based on Brock's relationship with the Harvard investigators and medical school faculty members. One is a 1.5 million seed investment in a company that focuses on neuromodulation and neuroregeneration out of Boston Children's Hospital. And then a $500,000 investment in the first outside investment round in a company that focuses on T-cell immune system reconstitution that came out of Mass General and the Harvard School of Engineering and Applied Science. So we're always looking for promising investment opportunities and looking forward to an exciting discussion with these seasoned and experienced investors on the panel.
Thank you, Jimmy. And last but not the least, Arno Held.
Thank you very much, Jenny. Thanks for the invitation, and it's a really big honor to be in this panel with such inspiring people. My name is Arno Held. I'm the managing partner and co-founder of AM Ventures. We are a 100 million euro early stage venture capital fund that is focused on industrial 3D printing companies. Originally, I'm an engineer as well. 25 years ago, the end of the 90s, I was trained as a field service engineer for industrial laser machines. So I'm a hardware guy. I love light as a tool to process materials. I learned how to build and repair and develop these kind of industrial production systems. About 15 years ago, I joined EOS, not EOS, the investor, but the machine tool company that is among the world market leaders in industrial 3D printing. We developed and built machines to print industrial 3D printing parts. I joined in the R&D department. I turned into strategy and business development. Over time, I realized that all the startups in our field of additive manufacturing had big trouble finding venture capital because around 2007, 2008, there were no competent hardware investors, nor investors ready to invest in 3D printing technologies. I think back then, deep tech as a term did not exist. Even so, yeah, at some point, my partner Johann Oberhofer and we had the idea to start a venture capital company and provide these disruptive technologies with seed investments, which we did from 2015 onwards, as a team of 2. Today, I'm one member of 10 in the team. We are 2 managing partners, and we have great team members who are all extremely passionate about our technology that we are still focused on, because that's what we know. We are engineers, we understand what we can hold in our hands. And we're excited by the opportunity to changing the world in climate tech, in health tech, in all kind of energy transition and energy or resource reduction applications. And since we started AM Ventures back in 2015, we fully focused on scouting the world of industrial 3D printing for startups. And therefore, I think we've built quite a compelling technology radar in the meantime. We have about 2,500 startups in our database. So we know quite a bit about success and survival rates about companies in our field. I think we know quite a bit where the trends are going, because we are also looking at the distribution of hardware companies and software and materials, and particularly applications. So what is happening with 3D printing technology? What is being built with this new way to produce parts? And therefore, we can derive quite a bit of trends. And most of all, I think we can be of quite good help for our portfolio companies to tell them where the things are going and what's happening in our industry. And with this approach, we've now built a portfolio of 17 companies in 6 countries on 3 different continents. So we invested in Germany, Austria, Switzerland, Sweden, the United States, and Australia. And the number keeps increasing, and it's still, after all these years, it's a lot of fun to watch and accompany the founders that are active and inspiring us every day. We typically invest, let's say, something between 500,000 and 1.5 million euros in the initial investment. What we love to do most is turning 3 engineers and a PowerPoint deck into entrepreneurs and companies. But of course, we also reserve some funds for follow-on funding rounds to stay on board for as long as we can.
Awesome. I mean, your introduction actually, I'm curious, what are the trends that you're talking about? Are you willing to share those numbers? What is the success rate in your current 3D printing startup investment that you observed?
Well, globally speaking, it's really hard to say. I think what is extremely exciting to look at, first of all, are the survival rates in different countries and different regions of the world. And there we can clearly say that the region where a startup is born has a tremendous impact on its success rate. Within countries, of course, for example, in the United States, there are, I would say, 4 regions where a 3D printing startup can become successful, which are the Bay Area, the Boston area, Austin, and Colorado. So this is what we observe. In Central Europe, or in Western Europe, in the DACH region where we're located, there's a corridor ranging from Stuttgart Munich and Vienna down to Zurich. That's roughly the area which is most promising for startups in our field. Of course, it always starts with a great technical university and great industrial players that are agglomerating in a certain region, and then you can increase the likelihood for success quite a bit. But when we look at interesting trends in the startup world, or especially in 3D printing, for me, the most exciting development that we've seen in the past 2 years is the rise of applications. When I look at my technology radar in the first 5 years or so, when we started to observe the industry, we had about 15% or so of the startups that we looked at were 3D printed products. And the majority of companies that were founded were hardware businesses or software businesses. And this has started to change dramatically. In fact, I think this year we scouted a couple of hundred startups, I think something around 500, and half of them are based on a 3D printed product. And you might ask, why is this so important? Well, applications are the justification for all the rest of the work that is being done. So you can develop as many machines and materials and software as you want. If there are no products to build, forget about the rest. And this trend now to see that implants, dental aligners, all kinds of ortheses and prostheses, or injection molding tools, heat exchangers, electric motors are now being printed and are ready to be rolled out into the mass. That gives a very, very clear statement that industrial 3D printing is now an industrial manufacturing technology and is really going to kick off.
Awesome. That's so informative. Thank you so much. I want to segue what we just talked about. You mentioned that you found a couple hundreds of startups. I mean, we barely have a couple of dozens coming through Pitch 3D focusing on healthcare. So how do you manage going through so many startups? I want to start with you, and then we'll go reverse order down everybody to answer this question. How do you manage so many deal flows? Because I have a friend who said, you know, if people send me a deck, because I have hundreds to look at, I'm just using my phone to go through my slide. And I'm like, really? That's how much time you have for it? How do you, what is your deal flow process? You know, how do you initiate and go down the line to meet the founders and stuff?
Well, first of all, just like with the startups, also within AIM Ventures, it's about the people. I have such a great team of extremely motivated and very competent people who know what to look for. And I could not do it without this great team. So this is for sure the most important thing. We've learned a lot over the years. In the beginning, I think the first year we scouted 40 startups, and now it's more than 400. Over time, you get more experience, you know a little bit more what to look for, and we can see even in an email or in a pitch, if someone is not putting a high effort into it, you can derive how motivated are they and what is their aspiration to deliver quality. So that helps you to already filter out quite a bit. In the end, it's about the team. It's about the composition of team. It's about the motivation of individuals, and yeah, not necessarily exactly the content of a business plan and a pitch, but you know, a business plan is obsolete 5 minutes after it was presented, but it shows how entrepreneurs think. It shows their own structure in their mind and how they view the world, and this is what I want to see. And the rest is a lot of diplomacy and gut feeling, I would say, more or less.
Art is a practice of an art. Jim, what are your thoughts? How do you go through skills and distractions? I would say some are distractions, some are not. How do you filter signal noise?
Who did you direct that question to? Me?
Me, yo, yeah.
Oh, okay. No, I didn't hear you. So yeah, I mean, other than sort of the traditional way of evaluating initially a company's potential, and that is through the pitch deck, you know, you're looking at, as Arno said, you're looking at the you know, who has basically founded the team, the expertise that is injected into the team, whether it's the CEO or whether it's a scientific founder. But then looking at the pitch deck quickly to see what the market needs are, the size of the addressable market, looking at the competitive landscape, and also some of the traditional things that you find in the pitch deck. But our situation is a little different in the sense that, as I mentioned at the very beginning, we are at the sort of company formation stage where we actually know a lot of the scientific founders in the academic labs. We are hoping that we can identify those projects, not even companies formed yet, but the projects that really have the potential to address the medical needs. And so we know the scientific founders well. We know that their research is sound, and therefore we like to help them bring a team, whether it's bringing in a CEO or assembling a group of scientists. Oftentimes the scientific founder actually have postdocs in their labs that are willing to go ahead and join the companies, which is the ideal situation because you have folks that actually have the background and experience in that particular area to get beyond sort of a proof of concept and eventually, getting the additional funding to then start working on putting together the business plan and also determining, what the strategy is in terms of the various clinical trials design that you want to have in place. And so, so basically, looking for those particular qualities and the fact that we're helping to build the team, we have the ability to influence the folks who join the team and emphasizing, the individuals who are behind this effort. And so that's how we kind of try to put together the companies that we invest in. And then we also help, obviously, bring in the money at later stages to help with various aspects of the company's needs going forward.
Thank you, Jimmy. Natalie, what about you?
Sure. I think a point Arno made is really a strong one. I mean, you can look for, execution at various stages. If the outreach isn't thoughtful, if, we're hearing from companies and you're just, seeing things that don't align. I mean, there's so much deal flow out there, especially for us, because we're not just in a niche. I don't want to say it's quick nose, but, we gravitate towards high quality and, members of our investment group, we're not, a fund. We don't have management fees. We really try to incentivize our team and, leaders of our team to step up and help with activities because it's a lot of work, sourcing, screening, running the early stage mechanisms. But yeah, I think we're very proactive. We try to, find deal flow from a bunch of different channels. Right now, we're actually looking at creating something. So it's a little bit more of a mechanism where we can share deal flow with other investors. Would love to invite, some of you to be a part of that. But basically having a process, right? We need a process to be able to get through, all the deals. And I'd say it's a little bit crazy top of funnel, but, we have enough experience. I have, much more experience than the year of starting this in terms of investing. And so there are things that we look for, and it's not just the deck. It's not just an email. It's so many different things. It's who is the team? What are they going after? And so I think we'll get better at articulating maybe more clearly, this is what we look for, but I'd say we're definitely figuring out and being able to weed out and say, these 5% are ones that we actually want to dive into, where, we want to get our deal flow up. We're seeing maybe hundreds of deals right now, on a quarterly, but we want to get that number up because the more you can see, obviously, the better deals you can select. So hopefully that makes sense.
Yeah, that makes sense. And it's interesting that you guys were talking about this, using this word quality. I wonder if you guys are all reading the same book I'm reading, which is the Zen and the Art and Zen of Motorcycle Maintenance.
I already knew you were going to mention that book. When you
Love that book.
Just throwing that out there.
To philosophy, but it's interesting. Anyways, let's move on to Tom V. You first. What's your selecting deals?
Yeah, I want to echo some of what Natalie said is if you look at a lot of deals, after a while, you kind of get a gut feel for it. For us, we look at over 1,000 deals a year, or I do personally, and look at a lot of pitch decks. Pretty easy to throw out a lot of them because they don't meet Keto's criteria. We do need a lead investor. If they don't have a lead investor, they're not ready for us. If they're raising $20 million at a $100 million valuation, they're too late for us. So rule those out very quickly and easily. But then it comes down to, do they have something that's really solving a problem that's needed to be solved? I do have an issue with some of the people that come out of universities or hospitals that have a cool technology, but they don't know what it's good for. We saw one yesterday that we thought the technology was fabulous. It can actually go in and poke a little tiny hole in a cell and do gene therapy. You can do CRISPR-Cas9 in it, but they had no clue how to turn that into business. How would they monetize it? How would they raise money? How much money do they need to raise to build it up to the point? How are they going to distribute it? How are they going to get it out? So they had the technology, but they didn't have the market need. And that comes down to the team. The team's a part of it. And then do they understand their competition? Are they 10 times better than any competitor out there to solve that need? And if it's medical, then the regulatory comes in as well. What's the regulatory path? If it's a typical brand new small molecule drug, it's going to take $100 million in 10 years to get there. It's not of interest to us. We want to get our return on investment within 3 to 5 years. So pretty simple criteria. That makes maybe, like with Natalie, 5% of them get through that, and then I start bringing my colleagues in who are experts in a field, whether it's orthopedics or dentistry or ophthalmology or cardiology or whatever. Bring in the experts because they know the need better than I do, and that's how to get in the front door.
Thank you. Okay, let's hear from Tom G.
So first, I'll say that as a strategic investor, something that I very rarely see, but is a huge help for us, is an idea from the founder what the strategic connection might be with us. That makes things a lot easier if I get something up front that says, hey, this is why we're interested in you specifically, other than just as a source of money. I try to tell startups we're a real big pain, an inconvenient source of money if all you need is money, and it's not really in our wheelhouse. I'll also echo what Thomas said, especially in this space. For me, once I've identified that there's some area of strategic alignment with us, the first thing that I look for is business plan, because I way more often than not see a lot about how great the technology could be in 7 different areas, and not really that sophistication on the business side of things. And unfortunately, a lot of our experience has been in founders that have a great technology but aren't necessarily able to raise or able to come up with a solid business plan in time to lead to success for them.
Thank you. Tech?
Yeah, to the original question around sort of how we process deals, frankly, it's the three-legged stool of people, market, and technology. So, if it's someone that I know already or someone at my firm knows already, those people get early priority. And then we do review every deck that comes through, and look at the market, look at the market opportunity, look at the technology, and then I'd also say reimbursement as well is super important, as the fourth leg of that stool. And then frankly, I try to get back to 100%. I'd say it's probably more like 99.9%, but almost everyone should get a response from us, one way or another. We try our best to be helpful, but the reality is that we can't fund everything out there. Probably we see well over 1,000 a year, and like a number of the individuals on this call, and do 1 or 2. Frankly, and I don't know if the entrepreneurs on this call are going to like this, but we typically pick the area that we want to do, and then we'll landscape. And then if you get a call from me, it's a very different situation. I typically say I wanted to do an investment in 3D printing, right? I would, do a full landscape. I would talk to, the KOLs in the space, say, whatever it is, pancreas or kidneys you want to print. I would call all the KOLs in the space, try to understand, from, the clinical to the basic science, and then try to track down the companies that are all, printing, kidneys or pancreas in those spaces. And then I'll pick which one. So that's typically, honestly, that's how we get our best deals is actually the reverse. And that's how I spend most of my time, to be honest. We do take, calls, especially from, entrepreneurs that are exited or, that we know. And then of course, we'll take calls from companies that are intriguing. But the reality is that of the 1 or 2 that we do a year, 1 to 1.5 of those, I've already selected what area I want to invest in, and then go that way. So that's typically how we do it.
Thank you, Chuck. I do honestly say on Zoom right now are probably the nicest investors out there, and have a reputation of being very nice people. So I think you guys are really lucky to meet them today.
Yeah, Jenny, let me follow up quickly on what Tak was saying and everybody else regarding sort of the team. And I would expand that to folks who are on the scientific advisory board and directors, and especially those that maybe you have come in contact with or who you have dealt with. If that deck shows that there is someone that is serving on the board or has been on the science or is on the scientific advisory board that you may have in the past worked with or collaborated with, that is something that we will spend more time to look at, because there's some credibility behind the companies. And these are people that you've known, and if they've decided to work with this company, then that adds a little more validation and credibility to that particular proposal. But you have to also be careful when you see some of these folks that may have big names, well-recognized names, but you need to make sure that they're involved and they understand the company well, and not just placing their names on the pitch deck. So
That's my concern, but yeah, totally. It would be nice to know all these advisors. Some of them are super famous. I don't even have access to them, but you see their names on every single deck, and you wonder how they have the time for it.
Yeah, right. We know some of those folks.
Yeah, I mean, for me, our process, our bar is much lower than everybody here. Really, if you have a company and you're focusing on healthcare, 3D printing and bioprinting and some adjacent field, I will be very open to let you pitch through. But over the years, I would say the quality of the startups have significantly improved. And I'm really happy to see the current deal. And I know it's going to be more and more impressive. The one thing that really turned me off is if you use animation that's you just copy and paste it from somewhere in your deck, that is a huge turnoff. Because as a 3D printing, bioprinting company, if you don't even have a photo or an electron microscopic pictures or some of those, stuff that you actually made to show me, then that is a problem to start. So that's just my hunch. Now, we talk a lot about people, and I really do agree. I think that's the most important element. What are some of the characters that you feel like this is a home run, even though you never met him before? With science, Jimmy, you talk about the scientific founders, people which I have encountered a couple of them. Some actually went on, did really well commercializing stuff. Others didn't. Not yet. I'm not saying they're not going to, just not yet. What are your thoughts? I would say this is open to everybody. What are your thoughts about being a scientist first and then become entrepreneur? Because we have a lot of those in our field.
Yeah, it all depends. I remember we were the first investors when I was with the Acer firm. We decided to invest, and this is before we knew what we doing. This is the first venture experience that I had 25 years ago, and that was investing in a company that was a robotics company that came out of the AI lab at MIT called iRobot. And this was founded by several investors, several postdocs in the out of the AI lab, working with Rod Brooks. And we worked with the scientific founders. I mean, and the current CEO of this company, and they went public in 2005, and he's still the CEO and the original scientific founders. So it really depends. If you give, and many of these scientific founders are only able to bring a company to a certain stage until you find, a professional CEO that comes in. In the iRobot case, we brought in some really heavy hitters that were focused on specific areas of the business that helped the CEO. And so we had a lot of patience. I think we ended up, having financing through the Series E round, and each of these investors, came in with value add at each stage. But sometimes these CEOs, the scientific founders, can only go through to Series A, and therefore you bring in a professional. Others, depending on their ability to adapt and learn, can take it. So it all depends on the situation.
Yeah, I don't know. Have you encountered any scientific founders or technical founders?
Many. We are specifically looking for them. I think most founders that we've invested in started their career in science. I think it's really important for a good entrepreneur to have a very solid T profile, so very specific knowledge, in-depth knowledge in a certain field, and then the broad T bar across many competences. It's not so easy to develop and to find, because the different requirements are sometimes opposing. As a scientist, you cannot accept that things happen randomly. And as an entrepreneur, you have to accept that random things can happen, and you deal with it. And so these are completely different profiles that need to be combined in one personality. So, of course, in deep tech, a good founder knows her and his stuff and has a very, very deep knowledge in a certain field, but then also the ability to reflect on their behavior and asking questions, not to confirm their ideas, but to challenge their ideas. And then also the willingness to reflect and to learn and to listen to outside advice of their good advisors that they hopefully have. So probably, especially in early stage investing, this is one of the biggest challenges: finding great scientists and evaluate their potential to become good entrepreneurs or great entrepreneurs.
Yeah.
And if we can find this in a pitch deck or in the team, then I think the rest can be built with good advisors and good additional people and team members around them.
Yeah, that really is where the art comes in. Tom G, do you have any thoughts on this?
Yeah, I'm going to be a little controversial and totally disagree. I think someone with deep science in a narrow area does not make a good CEO. I think they make an excellent CTO. And I always encourage people to partner up with somebody who's strong on business, who has the experience, who's very comfortable spending 90% of their time talking to idiot investors like all of us around the table here and putting up with us. I had to do that. I was CEO of a startup at one point and did spend 90% of my time raising money and not really being involved much with the technology at all. I knew the technology. I had the PhD in the field, but I didn't use that skill at all. It was really dealing with the people, going out there, convincing people that we were solving a problem, that our valuation was reasonable, talking to lawyers, bringing on marketing, distribution, things I really didn't have the expertise in and should have. But I look for that balance of skills, and usually it's a two-person team, a CEO and a CTO, even at the early stage. So throw
Thanks.
that open.
Thanks, Tom V. I was gonna actually direct, but Tom G. It's a little confusing. We have two Toms on the call, but we'll manage.
It doesn't help that G and V rhyme, and I don't know if it also doesn't help that I'm going to echo Thomas again. I I don't know if it's like that I think that the deep tech background is less important, or it's that in deep tech I see a ton of technical background and much less business execution, so I'm always a lot more sensitive to that. But I think for us especially, I believe, and I've seen investors that can succeed taking a completely technical founder and putting a business person beside them. That's not really our role. And so I either need to see a founding team that has these things in place, or I need to see, a really technical guy with an investor that I trust to do that. I'll just say.
Thanks. Nelly?
Yeah, I very much agree with what Tom G just said, since we're mixing up the Toms. Listen, I think if you can find somebody with a deep tech, deep science background who can also be the business person or learn enough, great. But I haven't seen that, frankly. So I think it's just really important that, well, you of course need, enough of that deep knowledge, and you need the scientists or people with the caliber to be able to do the thing and to be significant parts to the business. But for them to be the founder and the leader and to do the go to market, I mean, I just haven't seen it. I haven't seen the fundraising executed well. Sorry to any of the founders out there who maybe I've talked to and looked at, but I really think it's a different skill set. And so to be able to navigate or have someone really strong who works alongside them, great. We're not going to be able to completely manage or get somebody in there. So I like to see that it's not just the kind of the scientist running the business. If it's really early, I think that maybe is okay, but I think it's also really important to understand, are they going to step back? Do they know their limitations? And that's something that founder hubris is common. So recognizing, are they going to be able to step back? Are they going to be able to grow into that next stage? Because if they're having trouble, raising at an early stage, what's going to happen when they continue to grow? And also have a sales background. So I guess I can be a little bit more extreme in terms of looking for, kind of some of the go-to-market or, sales acumen, and, not a lot of founders have it, especially if they're coming, I think, from a more technical background.
Absolutely. You need to know how to hustle. That's the bottom line. Tech, you have any thoughts on this?
Yeah, I think I agree with a lot that has been said. I'd say, when we think about founders, honestly, venture capital is not about taking risk. I think everyone thinks we love taking risk. We actually don't like taking risk. If I could give you $1 and you give me $3 back, I'll take zero risk. Happy to do that. And so when I think about founders, we look for people that have executed in the past. So, the biggest marker obviously is if they've sold multiple companies, those get high marks, obviously. And then, when we think about, who we want to fund, ideally, these are individuals that have commercial backgrounds. Honestly, a lot of building a company is about salesmanship, and being able to sell investors on investing in the company, selling VPs and directors to join the company, ultimately selling product or selling the company. It's highly reliant upon sales skills, and so that's why typically it's commercial people that can do it. And we also look from, when we do an investment, we look from backward to forward. And so, we look for making sure that, look, it's a big market, there's reimbursement opportunities, but also that we have a team that can take it the whole way. And that's the ideal situation. Having said that, we're open to investing in, especially in the early stages, in the companies where the founders have technical backgrounds, as long as Natalie indicated, they are humble enough to step back at the appropriate time. And so, when there are, founders that are, MDs or engineers that don't, haven't sold a company before, frankly, I'll give them the chance, but I want to know, an early conversation, I want to know how they're thinking about it, and if they're humble enough to step back at the appropriate time. And look, if they're open and and open to and have the right attitude towards that, I think, I think the right response is, I'd love to be able to take this all away, but I understand my limitations and want the best for the company. And that's the right answer. And if someone says that, then I think, that carries a lot of favor with me. And I think, we're definitely open to those types of relationships and investments.
Thank you, Tarek. Yeah, we definitely see a lot of scientific founders through Pitch 3D flow. And in my very limited data collection in short time of investing, I have seen one character I like is when the founder who is a scientist who are very nimble in actually change, erase their past ideas and actually change and pivot and turn himself into a commercial sales person and have this charisma on stage. I have seen that happen before, and that turns out to be a good company. So I have seen that kind of change, but not many, because the ones that I'm seeing right now are pretty early, and I'm still waiting for that transformation to happen for a lot of them. So we have quite a few questions from the audience, and I'm gonna look into these. So one question from Casper Slot. He is actually the CEO, the co-founder for Osmium 3D. Used to be Particle 3D, and then they have a company for bone bioprinting material. And he said, if you're open to investing in foreign companies, I believe his company is in Denmark. What are some of the your experiences and requirements